Dan Ives with us this morning, I'm pleased to say, maintaining his outperform rating on shares of Apple and raising his price target to $245. You like what you see. What are you looking at, Dan?
I mean, fundamentally, many yelling fire in a crowd theater here. And if you look at China, that's specifically the focus. Growth in mainland China, given all the sort of worries about, call it demonstrations in the street, pro-Huawei, anti-Apple, you saw what came through. And ultimately, back against the wall, Cook came out, swinging like Mayweather.
We'll get to China in just a moment. I like the boxing reference as well. For anyone that doesn't know who Mayweather is, I mean, go Google it and work that out for yourself. Generating less than half of your quarterly revenue from the iPhone. How big a transition is that? It's been a while. Last time it was 2012. How significant is it?
It's significant because it shows a metamorphosis, what's happened here. The Rock of Gibraltar continues to be iPhone, and that's something going to next year called 180, 190 million units. Services is the fuel in the engine. That's the growth. And that's why right now, this is a stock that, in our opinion, is going to continue to get re-rated by the street, new highs. And especially, look, we think the China situation was a $20 to $25 overhang on the stock.
Well, let's talk about the China situation. What's your read, Chetan, at the moment? Not on Apple, of course, but on China. The situation on the ground, economically speaking. Are things stabilizing? Are things getting better?
I think things are stabilizing. They're not getting better. They're just at that low levels that we have seen. So it's around that 6.2% GDP growth that they've been clocking. Even the PMI readings are showing you that. We trust, not trust, but we actually focus more on the official PMI because that takes care of the large companies and the small companies. That's shown a little bit of improvement, but it's still in contraction territory. So stabilizing at that weak level, I would say.
What do you think, Keith?
Yeah, I would agree with that, and I would point out that they were in an even worse quarter-over-quarter growth pace. In Q4, we saw an uptick and a stabilization. I think in line with his history, the median timing would point to a troughing in global PMIs, where they peaked in December, and again, China in line with that. And we're starting to see that fiscal stimulus coming through, the infrastructure spending, and again, stabilization is key, just as talks around U.S.-China trade tensions are helping to diffuse the situation a little bit, and we're seeing stabilization also in some of the import data of goods that were tariffed from China.
When the bar is low, talks are sufficient. When the bar is low, stabilization is more than efficient. When the bar is low, everything's okay, Dan. Things are stabilizing. But the bar's going to start to drip higher. We're up 5% right now on Apple stock. I just wonder in the quarters to come whether stabilization in China is enough. And let's be clear, it's still pointing in the wrong direction. The losses might have stabilized just in terms of the contraction in growth. But when are we going to start to ask the question, show me some growth again?
Yeah, it's a good question. That's why China is the wild card when you look going forward. But it all comes down to if services could stay in that sort of mid-teen growth rate, monetization of the install base, that's the golden jewel for Apple and Cupertino. If you look, that's only 15% penetrated. So I think in terms of growth, you'll start to see, especially go into a super cycle on 5G. Right now, Apple's a name outside of China, which was really the big risk. Last night, what they proved is that this is a name that's going to continue to show growth on services, and it's all about the install base, in our opinion.
When does that super cycle begin?
Look, I think going into mid next year, going into that sort of late 2020, 2021, you're going to see a massive cycle for Apple. You have 350 million iPhones right now in the window of an upgrade opportunity. You'll probably see about 180 or 190 million upgrade over the next year. But then this is a company that's really going to see significant growth on that super cycle. Services is the key. That's the fence around the backyard.
So, Dan, something I'm trying to work out is how lumpy that upgrade cycle will be. A new phone expected in the fall, and how vulnerable that revenue guidance might be as well. If I know that great thing is just around the corner, why am I going to upgrade in September? Why don't I sit on it just for a little bit longer? How lumpy could this be?
Well, I think if you look at guidance, it's basically implying flat year-over-year iPhone units, and that's better than expected. Many were fearing down. So that's why the September guidance is the key feather in the cap for the bulls. When you go into, call it 2020, 2021, that's where you see more of a ramp. That's why services right now, with that sort of stabilization of iPhone, specifically in China, that's the 1-2 punch that, in our opinion, sees a stock 240, 250.
Dan Ives, love catching up with you.